Kevin Green and Nicole Petallides are with me. So it seems like probably our most important one here is Cisco this afternoon, Nicole. For those hunting for value in tech, this might present an option if they can deliver on the numbers.
Yeah, and look, when you think about networking and Cisco, and a lot of these tech companies have been in favor and have been doing some layoffs as well, and Cisco has been doing some, but it is well off the highs. So, is it still feeling the effects of the pandemic, or what is it that needs to give it this boost and catalyst to move back to those highs, while some of the other tech names have been doing exactly that?
All right. Do you think this might turn out to be a value opportunity, Kevin Green? Because there's not a lot of companies in big tech that are this far off their highs. And Cisco's, it's not like they're declining in revenues. It's not like they can't, make money. This is an established, very strong company that was just at highs, less than 6 months ago.
Yeah, definitely. I mean, at the end of the day, we actually are seeing some growth when it comes to Cisco, but they also have this on-premise business, which did drag the stock down over the last couple of months here, Oliver, where they're basically cannibalizing their business. Their on-premise business has to now go over to the cloud. So they're trying to really onboard those clients as much as they possibly can. And if that growth rate does not really match the new clients that they're bringing on board as well, then the market gets a little bit nervous about their growth moving forward here. So I think that's going to be the biggest challenge for them. I think that's going to be the biggest question on the conference call, how that process is really going and how enterprise spending is holding up here over the last couple of months, as we have seen, some commentary around macroeconomic factors that could cause companies to pull back a little bit.
Yeah. It definitely is a good point. Cisco hasn't had an all-time high in more than a year, so all of this has kind of existed under that sort of albatross of their legacy business, which has been sluggish, been a little dragging. But this is an earnings season where maybe if you throw a little bit more to shareholders, buy back or a dividend, that could be the type of thing that Cisco could turn to in lieu of big stellar growth. Twilio, which has been a huge disappointment over the last couple of years, Nicole, used to be a favorite early on in the cloud trade. This thing was like the poster child of growth, basically at any cost, though, and it turns out it costs too much, and the company, nobody's been wanting to really touch it since it dropped below $100.
Yeah, it's so different when you look at a name like Twilio, because when you think about what's happening with Cisco, right, and you think about the PE ratios and them being so low at that point, and just seeing all the things that are going so well for a name like Cisco. You had growing earnings, double digits. The cash flow has been very healthy. The return on equity has been very high. What can this cloud computing company, when you think about Twilio, bring to the table for us today? This name was soaring. I remember when we were back at the NASDAQ, and I was looking at this ticker symbol regularly and just noting how incredibly well it was doing. But where has it been? It's sort of been out of the spotlight 1,000%. It's just not a name that we've been hearing about. So we'll see whether or not they can bring something to the table today.
I kind of feel like we have two companies that may be sort of in the crosshairs of AI disruption. And Twilio and Trip are them. And Twilio, to an extent, they've already made some layoffs. They're trying to really trim down the fat and be lean and mean. And I feel like in the realm of communication software, there's probably a good deal of automation that already happens in their tech stack, and maybe a little LLM could make things even more smooth there. I don't know. I could be totally wrong. TripAdvisor, though, I'm pretty sure I'm right, KG. It seems like a stock to me that's in existential crisis, because I literally did this the first day ChatGPT came out, and it was amazing the way you can plan vacations. This thing knows everything about everywhere.
Yeah, and the competition in the space continues to ramp up here, Oliver. And we've had some mixed reports when we're looking at some of the other competitors, if you're looking at Expedia or even an Airbnb for that matter. So it's not only just the technological advances for this company that could actually improve their margins, but are they going to be able to continue to take market share for some of the other well-known players that are in this space? I'm not sure if that's going to be the case. And then for Twilio, I mean, they had when they came on the scene, they really focused on APIs and really focusing on these small business and mid-sized businesses trying to ramp up communications. But now we have seen a lot of competition within the space as well, coming from some of the major players, even Cisco, if you're talking about Google, if you're talking about Microsoft, and they just haven't had that value add type of story here over the last couple of quarters. And expense management is only going to take you so long. You got to be able to, or take you so far, you're going to have to be able to show organic growth as well. And I think that's just been a headwind for them over the last couple of quarters.
Okay. Cisco's out. Let's talk networking first here this afternoon. Right now, shares are slipping, not in a big way, but in a notable way, down a couple percent. They reported second quarter EPS of 87 cents on a revenue of 12.8 billion. That is a beat on the revenue side. The analysts were looking for 84 cents on earnings, so it's a 3-cent beat there. Trailing numbers are basically a solid double beat. I think pretty standard by Cisco's history to be able to kind of clear the hurdle there. The revenues, though, are still down from a year ago, so I'm wrong in their potential to be growing. I kind of thought at this point maybe we'd be able to clear that bar. The thing is, earnings are down too. So, I guess there's too much still dragging behind this company, Nicole.
Yeah, and I will say, as I was looking at the earnings per share coming in, glad to see the beat. And you said, look, we usually see a beat. But I will say that the whisper numbers were more like 86 cents. So had they come in at 84 cents, there was talk on Wall Street sort of behind the scenes that they'd be missing if they came in line. So nice to see them beating by 3 cents here, at least on the earnings per share side of things. And to your point, missing on the sales, right, coming in at 12.8 versus the estimate. And so with that.
Hey, we got a dividend increase there, 3%, 40 cents a share. We got something decent. So.
I must be brain dead. It says it comes in at 12.8, missing the 12.7 estimate.
Yeah, a little tiny bit ahead.
12.7.
Still declining, though.
Annual
decline.
That's not a miss, though.
No,
but that's not a miss, though. Is that a miss?
It's not. It's not a miss,
so
but it's still
a
drop. Still drop from a year ago.
It is a drop.
So,
yeah.
It's nothing good.
Well, year over year for sure. Year over year for sure. And that drop is something. And then you see the guidance going forward for earnings per share of 368 to 374. And that is also below the consensus of 387. Not good news there. So that's problematic as well, with the revenue 51 to 52.5 billion, missing the estimate of 54 billion. The guidance is terrible.
Is this just the campus networking, Kevin Green, which is, the big companies that, big institutions that are, fixed, don't really need new Cisco product, and I guess fewer and further between after a bunch of offices closed? I mean, how come they can't get some growth here? How come they can't wring out any growth in this economy?
Well, they also have competitors too. So a lot of these campuses could also review the whole product stack that they need when it comes to not only software, but also networking. And so that's the hurdle that they have to go through. They have to continue to support the existing system that is out there, which is kind of a losing proposition over the long term. But they also have to kind of bring them over into the new platforms. And are they going to really do that? I think right now it's also a margin story. You are seeing margins contract if you're looking at it from a moving average type of basis. And actually pretty much every segment from Americas to looking at emerging markets and the European markets, see the Asia Pacific markets, sales on a year over year basis for pretty much each one of those regions has also gone down or declined on a year over year basis. And so I think the margin guide might be something that's a little bit concerning for the street, and why we probably are seeing a little bit of a move to the downside. The remaining performance obligations, it looks like they're trying to capture that number, and I had it here, but it looks like they're trying to capture at least 50% of that reported number, at least for the next 12 months. that seemed like that's a little bit more elongated than what we are usually seeing for this company here. So they did see that actually increase on by 12% on a year-over-year basis, but it seems like we're not just capturing or ramping up the speed on trying to onboard and try to provide some of these services quick enough for the street right now.
Okay. Hey, the dividend payout,
did you guys see that?
Doesn't look like it's going to be enough. What's that, Nicole?
I see it says dividend increase by 3% to 40 cents a share.
Right. I don't know if it's going to be enough.
Take that, right?
Yeah. It seems like the market's worried too much about losing some of the market share. Cisco looking soft. Maybe not looking like value after all. Let's talk Twilio. It's getting wrecked. Down about 10%. Closed at 74 bucks, trading 65 right now. The loss per share on an unadjusted basis is $2. This company is just bleeding money, burning money still. Adjusted basis got to 86 cents. I feel like after this earnings season, we've kind of grown out of the adjusted obsession here when your gap is still negative, though. So many companies have been able to turn the gap profitability at this point. Twilio's not. On an adjusted basis, the earnings did beat the estimate. Analysts were looking for 56 cents, so their adjusted number beats that. But the outlook of revenue from 1.025 to 1.03, a little bit shy of the analysts, which were looking for 1.04 or so. For the next quarter, for the first quarter, this is their fiscal fourth they're reporting. A little bit of a miss there. And I do think that at this point we've seen so much of profitability being prioritized in growth companies, Nicole, that Twilio looks way behind.
Yeah, and it's disconcerting when you see that the outlook here, as you noted, for the first quarter revenue coming in soft. I mean, you're hoping that at least, after a double beat on the quarter, these adjusted earnings per share having the beat, and as well as the sales with the beat, you hope that they can continue that momentum going forward. But to say, look, we did it now, but we won't be able to continue doing that, gives you a little bit of apprehension. They talked about a terrific quarter that they had and closing out this quarter, but noting that they're in a position of strength for the team and continuing to deliver on customer engagement vision for their customers. But the big picture here is they're missing on the numbers, and that's problematic.
Yeah. Outlook definitely left a little bit to be desired here. I mean, the trailing numbers are okay. What do you think, Kevin?
Yeah, they do actually highlight, too, that they are going through a restructuring when it comes to management in certain segments of their business, and they're going to have the full implementation or the full plan that they're going to announce in March of this year. So I think the market's going to be looking forward to that. How much can they really cut costs moving forward, even though they've done a fair amount? And as you're kind of talking about it, that organic growth has just not been there, and it's really hard to be profitable, especially for this company that's probably getting a fair amount of its profitability or its free cash flow getting eaten up by employee stock plans, which we see that when we look at growth companies, but that's really a headwind when you're trying to be gap profitable. And so you're going to need to either have your stock appreciate in order to kind of get out of that a little bit of a headwind, or find other ways to be able to grow. And they're just not doing that right now.
Okay. Yeah. I mean, it sounds like they're kind of chasing their tail to lay people off and try and free up some cash flow that way. But it seems like something that maybe should have been done like a year ago, year and a half ago. All right. TripAdvisor, the last one in our triumvirate here. Perhaps the winner in the aftermarket, the only one so far that's up. And they lead with the statement about focusing on long-term growth and profitability. They beat the estimate on the bottom line. They beat the estimate on the top line. I think that's a little bit of relief for this stock, Nicole, because it has not been a great couple of years for TripAdvisor. Even as the booking websites rally, the hotels, the cruise lines, even the airlines firm up, other than the last literally like 3 months, this stock had been downtrending for 2.5 years.
I would like to know what they mean when they say they'll continue to prioritize segment strategies, which will focus on long-term growth and profitability in 2024. What does that mean exactly? I mean, it's nice to see that they've had a double beat. It's the only one with an up arrow. So that's some good news there. But the big picture here is also, as we're hearing from different companies and consumer spending and maybe people tightening their purses a little bit, that may not bode well for a name like TripAdvisor as well. So, and the competitive landscape is huge. So, you know, how much are people going to be spending on trips? Are they going to, you know, shop till they drop type of thing? Or are they going to tighten the purse a little bit? And that's something that I'd like to hear more about.
Seems like they were leaning more on advertising too, but you know, I don't know if it's like if we consider it maybe a giant of that just yet. It kind of seems like they're in between, not really a booking site, kind of a marketing, you know, e-commerce site, almost like a Yelp in a way. Where do they fit into the puzzle, Kevin?
Everywhere at this point. But I mean, they are actually calling out here that the experiences now is around 40% of their total revenue, which I think is the mix that they really want to be able to see. And when you're looking at the revenue growth, 10% on a year-over-year basis, and then their Viator business segment, which I'm going to be honest with you, I'm not too familiar with, but that did see around a 27% increase
that's
on
like
a year-over-year
the tours,
basis.
Trips and stuff, activities, kind of like you can get on Airbnb where you go and you book, you know, they kind of compete there.
Okay, it sounds like they want to double down on that business. That's where they feel the growth is going to be, which it sounds like that would also be a part of experiences. So I think the product mix is getting there for them at this point, but they do have their hand in pretty much everything when you're looking at the trip experience. And so, you know, hearing about where do they want to have as far as that perfect mix between experiences and ad sales and things of that nature, how do they want to structure their businesses, I think is going to be key. But these growth rates on a year-over-year basis, when you're looking at revenue, like the Fork saw an increase of around 18% on a year-over-year basis. Very small portion of their total revenue, but once again, a growth spot. So it seems like they have some green shoots within this report.
Okay. Still negative free cash flow.
Yeah.
Go ahead, Nicole.
I was also wondering, you know, we saw the stock jump on that special committee of independent directors that were formed to evaluate this potential transaction for alternatives. When we look at Liberty TripAdvisor Holdings and what their evaluation is for that, it certainly gave a boost to the stock, but I'm not really sure what came of that. You know, what kind of alternatives and what is those segment strategies? I think Kevin just hit some of them, of some of the strategies that they have for a long term. But that could be a big deal when you talk about you know, looking for alternatives or ways to sort of wheel and deal. So that's something that we can continue to follow. But at least we see this one with an up arrow. You know, just going back to Twilio, I was looking at their buyback program. So they've completed almost 75% of that buyback. It was $1 billion buyback. They did 730 million of that. You know, It might have been nice if they tossed a bone and said something like, oh, we're increasing the share repurchase plan, right? Like not, we're almost done with it.
Right. Well, I feel like there's maybe should they have even bought them back to begin with if they you know are so you know kind of desperate at this point for for finding profits. We already got the cuts in Twilio workforce. Sounds like there might be some more coming. Cisco just told us they're going to make layoffs too. So definitely a bit of a unique tone this afternoon. And TripAdvisor the winner. All right, fascinating. Thanks guys. Kevin Green, Nicole Petallides.